Gold has always been more than just a shiny metal. It's been a symbol of power, wealth, and financial security for centuries. But now China's recent gold buying spree is making waves across the global economy, and the United States isn't happy about it. Over the past year, China has ramped up its gold reserves to staggering levels, signaling a strategic shift that could undermine the dominance of the US dollar. Could this bold move from Beijing reshape the global financial order? Let's dive into the key details behind China's gold rush and what it means for the future of global markets. China's gold rush, a strategic shift. China's aggressive push to boost its gold reserves is more than a financial move. It's a calculated geopolitical strategy. Since the 2008 financial crisis, both China and Russia have been rapidly increasing their gold holdings to reduce dependence on the US dollar. The People's Bank of China, PBOC, has now become one of the world's largest gold buyers, increasing reserves for 17 consecutive months. By December 2024, China's gold reserves reached 73.2 million ounces, up 300,000 ounces from the previous month. This buying spree resumed after a 6-month pause prompted by rising trade tensions with the US. Beijing sees gold as a shield against potential Western economic sanctions and a tool to stabilize its financial system amid the yuan's weakening value. Gold's strength lies in its rarity and global acceptance, making it a reliable asset when fiat currencies fluctuate. By stockpiling gold, China is not only securing financial stability but also positioning itself to challenge the dollar's dominance in global trade. But China is not stopping there. Its next move could shake up the gold market even more. Gold's rise as a safe haven. Gold's recent price surge isn't just about China, it reflects global market instability. At the start of 2025, gold hit a record high of $2,849.50 per ounce. As trade wars, inflation, and geopolitical tensions, especially in Ukraine and Taiwan, rattled markets, investors seeking stability have flocked to gold as a hedge against uncertainty. Central banks worldwide have followed suit. The World Gold Council reported that central bank gold purchases reached an all-time high in the first half of 2024, with China and Turkey leading the charge, followed closely by India. This trend toward gold over dollars signals a shift away from U.S. financial dominance. Ross Norman, a metals analyst, summed it up. Gold's rise reflects market anxiety about the trade war and its potential to destabilize the global economy. Beijing's stockpiling of gold isn't just about securing reserves. It's about positioning China as a dominant player in a reshaped global financial order. If China backs the yuan with gold, it could strengthen the currency's credibility and challenge the dollar's dominance in global trade, giving Beijing more leverage in future economic conflicts. And China's growing reserves just got a serious boost with a major discovery. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now let's shift gears and steer towards our next point. Huanggu Gold Deposit, a game changer for China. China's gold strategy got a massive boost with the discovery of the Huanggu Gold Deposit in Hunan Province, one of the largest gold finds in recent history. Estimated to hold 1,100 metric tons of high-grade ore valued at $83 billion, this discovery strengthens China's position as a global gold powerhouse. Initial exploration revealed 330 metric tons of gold, but geological surveys suggest another 770 metric tons could lie deeper underground. The ore's gold concentration of 138 grams per ton is far above the global average, making it a highly valuable resource. This find cements China's status as the world's largest gold producer, accounting for 10% of global production. Increased domestic production allows Beijing to reduce reliance on imports from countries like Australia and South Africa. It also gives China greater leverage in trade negotiations and provides a financial cushion to stabilize the yuan amid market volatility. However, large-scale mining comes with environmental risks, including soil erosion and water pollution. Despite these concerns, Beijing is expected to press forward, prioritizing the economic and geopolitical advantages of this discovery over environmental costs. But controlling the gold market is only part of China's bigger plan. It's also about challenging global financial dominance. A challenge to U.S. financial dominance. China's aggressive gold accumulation signals a strategic push to challenge U.S. financial supremacy. The U.S. dollar has long been the world's reserve currency, supported by the strength of the American economy. But that dominance is starting to slip. According to the International Monetary Fund, the share of global foreign exchange reserves held in U.S. dollars has dropped from 71% in 1999 to 59% by the end of 2024. While the dollar remains dominant, the shift toward diversification is undeniable, and China is leading the charge. Beijing's rising gold reserves position it to create an alternative financial system backed by gold. If China reduces its holdings of U.S. Treasury bonds or even hints at selling them, it could destabilize global markets and drive up borrowing costs in the U.S. and Europe. Other nations are following suit. Turkey and India have also ramped up their gold reserves, signaling a broader move away from dollar dependence. If China succeeds in partially backing the yuan with gold, it could enhance its credibility as a reserve currency and shift the balance of global financial power. And the impact of China's gold strategy extends beyond financial markets. It's also about reshaping global trade. The broader impact on global trade. China's gold strategy isn't just about financial security, it's about rewriting global trade rules. If Beijing backs the yuan with gold, it could undermine the dollar's dominance in international markets. Commodities like oil, metals, and agriculture could start being priced in yuan rather than dollars, reshaping the foundations of global trade. Countries with strong trade ties to China might shift toward holding yuan reserves instead of dollars. This would strengthen Beijing's position in trade negotiations and allow it to bypass U.S.-controlled financial institutions like the International Monetary Fund, IMF, and the World Bank. While this shift won't happen overnight, the groundwork is already in place. China's increasing gold reserves are part of a broader strategy to secure financial independence and build a more balanced global financial system. If successful, a gold-backed yuan could become a credible alternative to the dollar, giving China greater control over international trade and financial flows. So where does this leave China and the U.S.? Verdict: the road ahead for China and the U.S. China's aggressive gold accumulation is a bold strategic play with far-reaching consequences for the global financial order. The discovery of the Huanggu deposit gives Beijing even more leverage, while increasing gold reserves strengthen its position against economic instability and potential U.S. sanctions. If China links the yuan to gold, it could challenge the dollar's dominance and reshape international trade. The big question is, will the U.S. respond strategically or let China redefine the global financial landscape? The next few years will determine whether China's strategy is a stroke of genius or a dangerous gamble. What's your take on China's growing gold dominance? Could this really signal the end of the dollar's reign? Share your thoughts in the comments below, and don't forget to subscribe